I wanted to start this one off by saying I see a lot of financial education done on YouTube, on TikTok, on Instagram, and I noticed that there's a lot of tearing people down, but we're gonna spend our time building people up. A post went up that I get what they was trying to say, but I want to actually just put a different perspective on you. They said $1 million is not a lot of money. Why? Because inflation is eating money up to the point that if you had $8.2 million today, that would be like having $1 million back in 1970. So inflation is eating dollars up. So they're trying to encourage you to invest. But I want to tell you this, $1 million is a lot of money, family. Don't be fooled. Think about how many people you know who actually have $1 million right now. Go ask your mother, go ask your father, go ask your cousin, go ask your brother, sister, your next door neighbor. Maybe somebody got $1 million, but $1 million is a lot of money still. It doesn't mean that you shouldn't invest, but it means that there are people who are trying to set these expectations that they want you to meet. Meanwhile, if you had a whole 100,000, your life would be changed. If you had $50,000, your life would be changed, let alone $1 million. So don't be fooled into making you think that you need to have $20 million in order to be successful, family. That's not the case. Success comes from determination, willpower, consistency, hitting goals that you want to hit. 10,000, 20,000, 50,000. 100,000, invest it. $1 million, invest it. $5 million, invest it. Don't ever let somebody tell you that what you're doing is not a great accomplishment. I wanted to put that one on you, family. If you agree with me, put 100 in the chat for your boy. Let's get to some of the bangers, and I want to start off by talking about some of the bangers that the family been knocking it out the park with, because I'm telling you, you got to be ready for this week coming up, and then the next one especially. I want to give a shout out to Memo94, who says sometimes it feels slow, but this just reminds me to stay patient. And he said, thank you. He's talking about the Robinhood 105 call. He actually stayed in it longer than me, and he made $2,000 on this one. Love to see it, big dog. Major salute to you, straight up. Rand, he just said, Keenan, you got me believing in myself again. I love to hear that, family. I love to hear that. With the hood play, happy to be a part of the family. Again, another person who stayed in it even longer than I stayed in. It made even more money than I made on it significantly. So I say that to say this, when you're in a circle of the right people, you're gonna find yourself winning hand over fist because you are learning skills that can help you to pay the bills. I want to tell you that investing carries major risk. So make sure that you understand the risk so you can understand how to be a risk manager and talk to a licensed financial advisor in your area before you take on any investments. Why is everybody making money? It's because people who rolling with us have been looking at Robinhood stock. If you hate the company or feel some way about them, it is what it is. I can't tell you to feel no different. That's okay. But what I can tell you is they are $117 at the time of this recording, and they've been pushing up. But we've been playing this one since I sent out the buy alert when it was $94 to load up on some of it. Some of y'all missed out on that. I encourage you to join the team, get in with the family so you can be up on these things. I know a lot of y'all circles are not people who constantly thinking about how to make more money, how to do it efficiently, how to be consistent and do it the right way. So I want to be that person in your circle and encourage you to invest into yourself. Now, Robinhood, it came down to 97 and even 95 in the last week, but we've been playing this one way before that one. So we recently just started jumping into more plays, and we recently just jumped into another Robinhood play because it's looking really good, and I'm gonna load you up with one in this video right here. I encourage you to join Keenan Grace's Stock Market University for the Gifted. The link is in the top of the description. I'm telling you this, invest into yourself. Opportunity is knocking. Answer the call. And let's get to Robinhood. These are the levels I want you to pay attention to. You might not see some of these levels again, but you need to understand that they are important. The first one is like 95. If you see it at 95, understand that that's an extremely critical level, especially after hearing that Robinhood is going to be in the S&P 500, aka the basket of stocks that all of the institutions just be pumping money into. So Robinhood is going to get a little sliver of all of that money that's pumping right into it that they weren't getting before. So that's really good. You might not see Robinhood come back down to the 90s, but if you do, just know that's an extreme level of support where they've been buying before. And even us, we've been buying before. The next one, the low 110s. If you see it come down to there, this is an area where institutions like to buy it as well. But Robinhood may be on the breakout. I went and did the research like I always tell you. Get into these apps that help you to get the information for free. For example, Moomoo, download it, put $100 on there. You don't have to, but I encourage you to, so you can get all of the benefits, aka the free stocks that come with it when you put $100 in your own account, and then you let that $100 sit, or even $1,000 or however much you put on there, and watch that 8.1% interest grow on your own money while you waiting to get into plays. It's a win-win. So I'm telling you, knock it out the park with that one. Bernstein, they just recently gave Robinhood a $160 price target. This is a $117 stock. I ain't saying that's going there overnight, but I'm telling you that even if it gets close to that, this is going to be a crazy play. Let's get to some other ones that are even lower. You got TR OpenAI, which is more of a AI model that's kind of looking at it. They said that it's going to 124, and then you got Barclays saying that it's going to 120. Why am I interested in this one? Because I'm looking at the financials, and the financials say that they just made about under $1 billion in terms of the revenue that they were bringing in. But now, if you look at the orange line, you can see the revenue was expected to jump up to about $1.1 billion. And with the inclusion in the S&P 500, we might start to see them get more publicity, more people joining the app. It might go even crazier than that. Robinhood, I got a play for you that I want you to pay attention to. If you see this come back down to the 110, if not even a 115, take a look at this call option. The March 20th, 2026, buy, call, the 120 strike. That's one that's going to have a high probability of printing if it comes down a little bit before the slingshot back up. Here's another one I want you to pay attention to. It's called Oracle. I mentioned this in a previous video. Oracle is another artificial intelligence kind of a play, and they have their earnings report where we find out if their company is doing better, worse, or the same that they've been doing over the last 3 months. And they're currently $238 right now, and their earnings is tomorrow on the 9th. So it's going to be very likely after the market closes. So why is this important? Because when you get around these earnings, when the companies tell you what's going on, they often tell you something called guidance. And when they guide higher, that's when you start to see them go even crazier than analysts even projected. Here are some numbers for you. With Oracle being about 238, 239, we know that it was pumping up about 36% in the last 3 months. So it was absolutely on fire. But you don't want to buy them when they're pushing up. You want to buy it when it exhausts down just a little bit before the next push up. So we are actually in an exhaustion phase right now, where in the last month, it came down 5%. So people who bought it a month ago, they basically down 5%, which isn't that crazy, but this could be that exhaustion point. So we want to make sure we're paying attention to the charts to see if it's going to pump back up. This is some background on a company. It's a $600+ billion company. So this is not some spring chicken new company, small company. It's actually a huge company. When you look at what's going on with them, the analyst from Benzinga said that it's likely to report higher Q1 earnings. I like to see where the institutions are playing it and how they're playing it. So I look and I check, and it says the hedge funds all the way on the right. I circled it in red. It says that they were selling out of it like crazy in the last quarter, and they were buying some, but really doing a whole lot of selling. So I want to see if we get better guidance and they're telling us that they expect to make more money or less money, because if they expect to make less money, then the institutions are going to sell out of it like crazy like they were doing. But if they expect to make more money than they showed, then you're going to start to see the institutions piling right back in. Take a look at this. When you look at the earnings, you can see that all the little orange dots, they start to go up. But then in the last two, there's one that's high and then one that's low. The stock was coming down because they were guiding lower. They expected to make lower money. But here's the thing, and you might have noticed this in the stock market. When companies guide a little bit lower, the expectations are low. So then it's easy to blow past the expectations. So it's kind of like a psychological thing that these companies are playing on Wall Street because they didn't know how to anticipate how people were going to act in this inflationary environment that we're currently in. Here's some numbers to look at too. If we see Oracle at about 238 and it's hole in there, push up just a little bit, it get to your 241 and the earnings is done and over with, and we see it close out above the 241. This is where it's going to likely try to go back up to about 256. That'll be the next point of resistance. So in that case, what I would do is look to play it up if we could close out a day after earnings over the 241. Before I get up out of here, I want to put this one on your radar too, because it's coming right around the corner. I mentioned in the previous video that Klarna is having their IPO. This is coming in about 2 days or so. And we got FIGR, Figure Technologies, they're having theirs too. And then Gemini, they're having theirs too. So we got 3 IPOs coming up. Family, if you want to be up on those, then hit the like, hit the subscribe, especially join KGU so you can be ready and tapped in for tomorrow on the live stream. If you're going to be on a live stream tomorrow, write live in the chat, family, so I know who in the building. I can't wait to see y'all. Everybody who ain't going to be there, I'm expecting you to tap in soon. so that we could get on and trade and show you how it's done in real time. Feel me? The time is now. I'll see y'all in the next one, and take care.